Alright guys, welcome to another video, and in today's video we'll be talking about leverage. We're talking about leverage, and now leverage is very important in forex because leverage is going to give you that edge to trade if you can risk all your money and all of that stuff. So let's break it down according to the definition and explain, right? Leverage in forex, and it's also applicable to the synthetic indices market. Leverage in forex is a useful financial tool that allows traders to increase their market exposure beyond their initial investment. That's their initial deposit. So leverage is always very important in trading, right? Some people want to lower leverage so that they won't be allowed to risk more than a particular amount of money in their account, right? Now, this means a trader can enter a position for $10,000 worth of currency and only need $1,000. That's why you see a broker is very important in a 10 to 10 leverage scenario. However, it is essential to know that gains and losses are magnified with the use of leverage. So with the use of leverage, that's how your gains and your losses are being all calculated. In adverse market scenarios, a trader using leverage might even lose more money than they have deposited. Now, sometimes you see a scenario where a trader loses money and ends up blowing an account, and you see the person's trading balance will be reading something like minus 300 or minus 500. Now, that's because of high leverage. The person over leveraged, and now when blowing the account, you are owing your broker. So if you deposited any money, then you are going to clear that debt first because of your leverage was very high. I hope that made sense. I hope it made sense. But it's also one thing I want to say before I continue this particular video. While watching all these courses, there is even when you go to school, there is what we call, especially these intermediate parts, you make your own research. The part I know that it will be so detailed that I don't think you might still want to further, which is not bad. You might still want to further and learn from other traders, which is not bad at all. But once you grasp it on this end, it will be to help you much more, right? But always try and help yourself, because if you don't help yourself, there's no way I can help you. So let's continue and then end this particular video and move to the next. Leverage of 10 to 10 means that a trader can gain exposure to a notional value or trade size 10 times more than the initial deposits / margin that is required to fund the trade. This can be thought of in a similar fashion to putting 10% deposits on a house. You gain access to the entire house while funding 10% of the value. Now that's an example. And I hope that example made you understand something that's the exact same thing that comes to leverage in trading. It's almost the same thing when it comes to when it comes to the foreign exchange market. I hope that made sense and you grasp, and then also make some researches and understand too. So basically, that's what a leverage is all about. I'll see you guys in the next video.